Welcome to The Explainer. Today, we're going to cut right through the jargon of a quarterly earnings report to figure out what's really going on inside one of America's energy giants, MPLX. Are they just moving gas, or are they making much bigger moves for the future? So when you see a facility like this, what you're really looking at are the arteries of the U.S. energy system. And today, we're digging into the company behind this whole network, MPLX, and what their latest report tells us about the health of their business. So the big question is, how are they actually doing? Well, the short answer is business is humming along just fine. But, the real story here isn't just that they're making money. It's what they're doing with it that has everyone paying such close attention. Yeah, the biggest news to come out of this whole report wasn't really about profits. It was about a direct return of cold, hard cash to the people who own a piece of the company, the unit holders. And that's the number that really grabbed the headlines, 12.5%. MPLX announced they're bumping up their quarterly distribution by that much. Now get this is the second year in a row they've made a jump this big. That's a really powerful signal. And the company's leadership is being super clear about it. This isn't just some one-time thing. They're basically saying, we're doing this because we are really, really confident in our ability to keep growing. Okay, so where's all this confidence coming from? To really get it, we've got to pop the hood and look at a couple of key numbers that kind of paint the picture of the company's financial health. First up is this thing called adjusted EBITDA. I know, it's a mouthful, but think of it like this. If you own a coffee shop, this number tells you how much money you're making just from selling coffee, before you pay your loans or your taxes. It's the purest look at how profitable your main business actually is. And as you can see, their financial health check is looking pretty good. That core profitability is up 3% from last year, hitting almost $1.8 billion for the quarter. That is a strong, steady pulse right there. Okay, next up is distributable cash flow. So if EBITDA is the profit from selling coffee, this number is the actual cash left in your register at the end of the day. It's the money that's actually available to be distributed to the owners. And yet, just like their earnings, that pile of cash got bigger. It's this growth in real, spendable money that gives them the firepower to boost those investor payouts we were just talking about. And when you add it all up, between the distributions and buying back their own stock, MPLX returned over $1 billion, with a B, to its unit holders. And that's just in this one quarter. But look, returning cash is only half the story. The other half is how they're using their money to build for the future. And they are definitely not just sitting on their hands. They are playing offense. What you're seeing here is a classic business move. They're optimizing. It's like a trade. They're selling off some assets in one region and then, bam, making a massive multi-billion-dollar buy in another one, the Permian Basin, which is pretty much the hottest energy-producing spot on the planet right now. They actually have a name for this whole strategy, wellhead to water. The idea is to own the entire journey of a gas molecule, from the moment it comes out of the ground, through all their pipes and plants, all the way to a ship on the coast, ready to sail overseas. And as you can see on this timeline, this is not just some fancy marketing slogan. We're talking about a real, multi-year, multi-billion-dollar plan to expand every single piece of that chain. New plants, bigger pipelines, massive new export facilities, the whole shebang. All right, so beyond the spreadsheets and the giant construction projects, MPLX also made it a point to talk about their efforts on the environmental and social side of things. A huge focus for them is methane, which is a really potent greenhouse gas. Their goal is a 75% reduction by 2030, and this chart shows they're already more than halfway there, at 59% of the target. For a natural gas company, this is absolutely critical. They're also focusing on things like biodiversity, aiming to restore thousands of acres along their pipeline routes and getting really involved with local communities through donations and thousands of hours of employee volunteer time. So what does this all mean? When you zoom out from all the individual numbers and projects, what's the big picture takeaway from this report? It really boils down to this super clear 4-step financial game plan. 1, take care of the business you already have. 2, pay your investors. 3, use what's left to fund smart growth. And 4, if there's still cash left over, find more ways to give it back. It's a really simple and clear priority list. And let me tell you, they are putting serious money behind that third step, growth. I mean, look at this chart. They've poured billions into growing the company, especially that massive spend in 2023. That's not just testing the waters, that's a cannonball splash. So that brings us to the final question. With billions of dollars already spent, MPLX isn't just building pipelines. They are making a massive bet on the long-term future of natural gas. The question for all of us is, in a world that's pushing toward new kinds of energy, is this a brilliant move to lock in the future? Or is it a massive gamble on the past?